Hello traders, welcome back to the channel. This is General with Trading the Charts Pro. And guys, in this video we're going to break down how to build a trade plan. Alright, and we're going to talk about why if you don't have a trade plan you should not be taking any trades to begin with. Alright, so don't Alright traders, so you may be asking yourself, well, if I have a strategy, do I still need to have a trade plan? And yes, you do need to have a trade plan. Now, what is actually a trade plan? A trade plan is just knowing, or is the process of evaluating the entire situation, in this sense, the entire chart, and knowing what you would do when and what you should do when. All right, so we're gonna break it down and I'm going to show you a little bit more in details how I structure my trading plan. All right, so when it comes to the trading plan, first thing I want to make sure I'm clear of is what is the pattern. So the number one step is pattern identification. So when I look at a specific stock, what is it that is present in this one stock that caused me to want to take my hard-earned cash out of my pocket, or in this case out of my trading account, and put it to work in this specific stock. What is present? What characteristics am I seeing in this chart? Why I feel like there is a probability that me putting my money to work in this situation is going to yield a return. And that's where as a trader, pattern recognition or pattern identification is super important, because when you analyze the chart, there has to be something present at this specific level why you feel like, okay, this is actually a good place to come in and take the cash and deploy the cash in anticipation of getting some return. So here, this is one chart of a uptrend, and this is a situation where I would be looking to deploy cash in anticipation of getting a return. The second diagram I'm putting on the screen right here, this is also a potential situation that I may be looking to deploy cash. And what kind of pattern is this? If we get a bounce at this level, then this pattern has the probability to become a W pattern, and that's a pattern that I typically like to trade. So in a bullish situation, these are two patterns that if I see a stock in a specific chart looking ready right at these levels, then I would be comfortable to deploy cash to work. So number one, when it comes to developing your trading plan, you have to know what kind of pattern is present, so that you can take advantage of that specific pattern. All right, so that's the first part of it. Now the second part of it is, okay, now that you've identified the specific pattern, what is the projected move that we're anticipating for this stock to make if you pretty much take the trade right here? Or whether or not you take the trade, where are we anticipating that price action is gonna go from here? So when we look at a W pattern, we know that this is support and this is support. So in this situation, the projected move on the W pattern would be a move where we're anticipating price to bounce off the bottom and come back up roughly to where it's coming from. Yes, we would always be a little bit cautious at the hump of the W, but the projected move would be this move right here. Okay, so with the W pattern, that would actually be the projected move. As far as price in the uptrend right here, then the projected move would be this move that we're looking for price to make and come back to the resistance level that it has done before. So every time price comes to support and it bounces, then this is the projected move, and you have to always know what is the projected move based on the price action that is taking place right now. So number one, pattern recognition, pattern identification, and then we break that down into, okay, what's the pattern that is present in the chart action right now, and then what is the projected move. So if I get in on this trade, where is this trade projected to go from these levels? All right, so that's the first part of it, and now we're gonna move on a little bit more in details. All right, so guys, after you've identified the pattern, identification, you break that down. Now it's time to start thinking about risk management. And under risk management, I like to break it down into a few smaller pieces, if you may, and dissect it a little bit more. So basically, when it comes to risk management, the number one thing you want to identify is what is the risk reward ratio. All right, so basically we're saying if we're putting money at risk in this trade right here, right now, what is the projected return that I'm anticipating to get for this projected risk? Okay, so typically most traders like to see a setup where we're taking one risk to get a 5 return. All right, so your risk typically needs to be way small or smaller than the projected reward. All right, and that's the reason for us to be doing the projection in the first place, to know 100% what is the risk and what is the reward, and is this level a good level to be getting into the trade to begin with. And in some instances, you will find the stock, at a situation where risk is 2 to 5, where it means that, risk is like 2 and your projected move is 5. So if we say our price can actually drop by $2 if the stock goes down, but if the stock moves to the upside, our projected move is going to be 5 points. Now, the first example, we're looking to risk 1 point to make a projected 5 points. All right. Now, the next part of risk management is stop loss level. And all of this does tie back in together, because technically, when you do your risk reward ratio, you're looking at your 5 points right here to be your projected price target. All right. And then when you look at the 1 point here, this is actually your stop loss level. So after you've done the projection on the price action, now you come in and use your risk to reward ratio to identify where are you going to put your stop loss level. So if we just, move back over to the chart, putting back up that very same diagram with the uptrend and the second one with the W pattern, and then we come in and identify, okay, what in this situation where when the price is moving up in an uptrend, at what level or risk level would basically be. So with a chart like this, we're identifying or saying that if price breaks below the support, this is a situation where we're losing 1 point, right? Every time we catch it early enough, when price bounces off the support, we would lose 1 point if price completely breaks down and start to go lower. But based on the projection of the move, if price continues to move up, then we would make a 5 point on those upside moves. All right, so that is how we basically break down and identify our risk to reward ratio and identify where we put our stop loss. And the profit target basically is going to be your resistance level, where that is the levels where price come to and sells off. I'm gonna break this down with a real-time chart when we get a little bit more to the back. All right, so when it comes to risk management, these are key elements that we have to focus on: risk to reward ratio, our stop loss level as it relates to the trade, what is the projected target, and then this one is a key factor in why most traders fail. The trade size. So trade size really depends on how much money you actually have in your account. So if you have a small account, let's say you have a $10,000 account, then going in on a one trade should never cost you $10,000, okay? It should never. Basically, you're going to set up your trade size. In this sense, I would probably do a $5,000 trade. So at least I'm able to take two $5,000 trades. So if one doesn't work out, at least I still have 50% of my account. So trade size is super important, and this is something that you have to consider when it comes to risk management when you're developing your trading plan. All right, let's keep it going. All right, so guys, the next part of the actual trading plan is, what is the market direction? Guys, you have to understand what is the overall market direction when you're incorporating your trading plan, because you want to understand what is the sentiment of the market. Is this trade that I'm crafting going to be in line with the sentiments of the market? Is this trade going to be in a bullish direction, or is it going to be a bearish direction? All right, you have to identify that and map that in conjunction with the market direction. So what I'm ultimately saying is that if you are crafting a bullish trade, you technically would like the market direction to be bullish. If you're crafting a bearish trade, it would be in your best interest if the overall market is in a bearish direction. And when you execute that properly or accurately, then this trade will pretty much be in sync with the market direction, meaning that the winds of the market will be at your back, and this will push the trade in the direction that you are anticipating it to go, and it will work out a lot faster. Okay, so that's another component of the trade plan. All right, so now guys, I want to walk you through how I craft a trade plan for Triple D, and this is just one stock that we traded earlier this week. Triple D is 3D printing technology. You guys may have heard about this. This is the one where they're using the technology to print these houses and stuff like that. Amazon is a part of it, so none of that really matters. What really matters is what the chart is saying. So I'm going to break down what I'm actually seeing in the chart and how I basically craft my trading plan for this stock. Okay, so this stock has moved up significantly earlier in the year. I wasn't a part of that. However, market corrected, this thing pulled down. It found a horizontal support level short term at this point. Price bounced, and from there we see where this thing just continued to accelerate to the downside. However, as soon as price came down roughly to the 200 day SMA, we see a situation where the stock stabilized, and then we had a short-term breakout of this triangular pattern. So basically what I'm seeing here is that this is a horizontal support level that held pretty nicely after the stock came up, pulled back. This was a nice confirmation that, okay, this support level right down here is actually going to be the bottom. So the moment I saw that, I started to put my trade plan together. So now, first thing I wanted to look at is, okay, what's the direction? Where's the support and the resistance? We identify that this is the level of support. Where can the stock go in terms of the resistance? Well, we see this level held as support, but when the stock came back up, it became resistance. So based on probability, over on this side, this is where I'm anticipating that the stock can go to the upside short term, and then we may get a pullback before it continues to move back to the upside. So after mapping that out, I saw that this is the level. Let me move this up just a little bit. This is going to be the level around $19 to $20 is going to be the ideal level that I want to be going long on this thing in anticipation of catching any upside move. So on this day when price bounced very nicely, I entered the trade right around here because I didn't see it all the way down in the bottom. But at this level, after analyzing everything, the trade looked good. My projection is going to be up to this level. And where would my stop loss level be? Well, if it breaks back down below 19, then that's the level that I would no longer want to be in this trade. So my stop loss level is actually going to be 19 and below. My projected target as where can this thing go is going to be up here at the resistance, and I have already analyzed the chart. So now it's just time to execute this trade, which I did right here, put in the allotted size that my account can facilitate, and then I just let the trade go, and we can see clearly that the trade just continued to move to the upside until this day. I actually closed the trade out, and from there we see we got a major reversal. I will be watching this to see if this thing end up pull back down, but one thing is very clear is that we got the breakout here, price pull back, retest of support, and then price continued to start moving up in an upward direction. So my projection as to where price can go was very clear. My stop loss level was very clear. So even if this did not move to the upside and it ended up breaking down to the downside, I knew clearly that if it breaks below 19, I would no longer be holding this trade. And this is something that you have to do with every stock that you see that you like that has a probability, in order to make sure that if things go right, the plan works, and if things doesn't go right, then you still have a plan to protect your account as well. All right, so I'm going to just quickly show you. This was a weekly trade, so pretty much we held this for a couple of days for the whole week, and you can see for the entire week we racked up around $7,000 in profit on this one trade. So basically I pretty much can say that when you set up a trading plan, it becomes easier for you to hold a trade and stay in a trade because you had pretty much calculated all the potential moves or things or situations that can actually, you know, pop up during this trade, and you know or will know how to navigate it because you had pretty much laid that out prior to getting in the trade. All right, so guys, I do hope you found some value inside this video. If you did, I look forward to seeing you on the next one.